Hi, this is Zak Mir with the Bulletin Board Heroes here on Vox Markets on Tuesday, the 18th of May, and looking a bit thin today again. Lack of enthusiasm, perhaps, on the part of investors, but starting with asimilar, where there's been that bear trap rebound from below 30 pence. That was at the beginning of the month. The view now is that while we're above the 50-day line at 36.94, the blue line there just below 37 pence, top of the channel here as high as 50 to 55 pence, perhaps, by the end of next month. Onto a stock which is rather better at trending at the moment, perhaps, is Angle. And here we've got a situation where it just keeps on breaking out this week, and from the end of last week through that £1.20 level. That was the April high, intraday high for the shares, above 120, looking towards the top of that broadening triangle from December, as high as £1.80 as soon as the end of next month. So something good to look forward to there. On to Scion Canada, which has been a stock which I've covered on several occasions. The reason for the inclusion today is the gap through the 50-day moving average at 7.15 pence. Today, gap higher, and probably now looking for at least a retest of the main 2021 resistance towards 9.5 pence, initial target over maybe the next couple of weeks. Big picture target here up towards the top of that rising trend channel from back in the summer of 2019 at 12 pence, and 12 pence could be seen as soon as the end of next month. The big plus points here on the daily chart, really, the way that we had that gap through the 200-day line in June, which was basically held around the 3 pence zone, and we've managed to progress 3 steps forward, 2 steps back ever since. But what tends to happen in these situations, they tend to resolve with a proper definitive big move, and perhaps now with the latest gap we'll see that happening for the shares. Moving along to Kavango, which I know is in the sights of some of the more active punters at the moment. Here we've got a situation where the breakout continues. We've broken out through that old February peak at 3.82 and above that, and the longer we stay above that, the greater the chance of a move towards 6 pence. At the current rate of progress, we could see that by the end of next month, as long as we hold above 3.82. In fact, yesterday's low back at 3.9. So it looks like old resistance is certainly becoming new support. So I said a bit thin today, so a few repeats from recent Bulletin Board Heroes on this particular sweep. First one is Macango, where there's been a nice breakout through the recent highs of the last few days, around 27 pence, so above 27 pence. Looking for the top of that broadening triangle from October as high as 35 pence. Broadening triangles, when you see them, normally suggest that it's a stock which is in a runaway move, so hopefully that's the situation here. But certainly we found support recently between 25 and 27, which was the old March resistance. So looking pretty well set up for Macango at the moment. If you're a fan of the shares and want to dream of something better than 35 pence, then there is a line of resistance there from back in February pointing to 55, 57 pence, and that may be a 2 to 3 month target. But let's go for 35 while we're above 25 at the moment. Stock which is also bubbling up quite nicely, and maybe one of the more obscure plays in the small cap space, but MySelect's technology is looking very good indeed. The reason for saying that is not only that gap higher that we had at the beginning of the month through 55 pence, that was effectively the buy signal, so the entry would have been somewhere between 55 and 60, or maybe even if it was 60, you'd be quite happy now. What we've had in the last few days, though, is a gap down, and then a 2-day gap down, and then a gap higher, and that island reversal, very strong feature on any chart, and a key reversal to the upside today. So full of positive glow there. End of day close above the initial May resistance at 74 pence should be enough to take the shares up to 100 pence by the end of June, and perhaps even quicker than that, given that island reversal that we've had and that beautiful bounce on Friday off the 20-day moving average area. Moving along to a rather more high-profile situation, Orphan, still enjoying the aftermath of last week's announcement regarding a £3 million contract. Current situation is a bit of a reshuffle here. We've sort of moved sideways over the recent past, probably looking towards the shares hitting 50 pence and the top of that rising trend channel from the middle of March. and that's valid while we hold above recent intraday support at 33. So above 33, looking for 50 plus. Big picture target towards the 80-90 pence area, but obviously at this stage, better just to go for the 50 plus zone until the situation pans out for the nearer target. If you are cautious on the shares, maybe wait for the MACD indicator to cross for a buy, as that has in the recent past, as you can see there in March, come up with a decent follow through for the shares. Next one is another one in the same similar kind of area, perhaps, Skin Bio Therapeutics. And here we've just had a little break out of the post-April triangle there. So the floor of the triangle around 58 pence, top of the triangle there at around 66. And end of day close above that April resistance line should start to accelerate the shares towards the top of the rising trend channel from September last year, as high as £1 by the end of next month. So looking pretty well set up while we hold above the 60 pence area or just below it. A couple of stocks to go now. Gold improving, and so therefore a good excuse for us to look at Shanta Gold. Here we've got another attempt at breaking the 200-day moving average at 15.6 pence. End of day close or weekly close above that should finally open up, second time lucky, or third time lucky even, for a move towards 22 pence, which is an October resistance line projection at the top of the triangle that we've had since the end of last year. At this stage, only really back below the 50-day line at 13.6 pence, really delaying the upside scenario. Verditech, one of the more painful stock situations of the past year, at least since the summer, but looks like we might, after a false dawn in March and actually in February, might have in fact, there's been so many false dawns here, it's you lose count, but this hopefully will not be a false dawn on the basis that on this occasion we've had the bear trap from below the late April floor at 3.4 pence, and while there's no end of day close back below that, looking for at least a retest of the 5 pence plus area. Best case scenario target, if we are indeed in a broadening triangle or a triangle formation from March, would be up towards 7 pence by the end of next month. So let's see if on that rather weak looking situation the recovery does actually start to take hold. But watch out for 3.4 pence holding for the confirmation of the ongoing recovery in that stock. That's it from me today. More updates tomorrow.